Yeah. What's up? What's up, everyone? No one's joined yet, but I'm just gonna start kind of talking about what's going on right now in the stock market and why we're seeing so much red. Let's see. Trying to get more people in here before I start talking too much. So, let me see. Alright, so on the screen right now, what we can see is that everything is down. Literally everything. And sometimes whenever people see this, they get scared and they want to jump out of it. But days like this are days that I feel like are buying days because you have a sale on pretty much everything on your best stocks. So, I mean, with NEO right here, it's down almost 8% to $56 for whatever reason. Lee, Space, the one I made a video on yesterday, I know that there was some bears talking about fuel cell in the hydrogen industry and how it's going to not survive and that it's overpriced right now. And I don't really believe all that. I feel like they're just trying to run down the market. But Beam, these are all the things that I have right now. This one's the one that I'm super bullish on, which is BFT. I feel like this one's going to be pretty big in the future. Kind of works like Square, and it's like the number one gaming, quote unquote, like ATM. So you get all your money through that. Let's actually take a look at that one. That's a good place to start. Let's see. So, BFT. So what the heck is this? Let's go to their company. BFT. Website. Does it exist? I know I've seen it before. Well, let's see. They're negative on revenue, but I'm not too worried about that. You see, it's a $9 billion acquisition. That's huge. Market cap's already at 2.86 billion, so that's what it's valued at, and it's just getting off of its feet. It's a SPAC, and it has a market cap of almost 3 billion. That's crazy. I mean, I really like this company. I feel like it can go like very far. I wish I could find the site for it. BFT. Maybe this. Presentation. Oh yeah, there we go. I feel like we'll find it on this. Oh, I guess it's under investor. PaySafe. Oh yeah, here we go. Okay, cool. So PaySafe. This sucker right here. Obviously. Chairman, Mr. Foley right there. He has companies that he's been in, like Fidelity. Not too sure about these other two. I mean, they're involved in banks, so they gotta, something. Right here, their transaction overview. Let's see. Nothing too crazy. 13% organic growth, though. It's pretty good. There's some good stuff, though, on here about it, if I get to it. Yeah, it has 75% e-commerce and integrated organic revenue. That's crazy. That means it's going to keep on happening. Organic revenue of 1.5 billion. Like, what? That's so much. Volume of 103 billion. So that means that this company is in and out of its hands is over $103 billion. But I'll take that. And then I can't speak. I'm not even going to try. I don't know why I can't pronounce that, but it's just not doing it for me right now. I'm not even going to try to pronounce that. But as you can see, global stored value digital wallet. Some of the companies that it's associated with, like DraftKings, Bet365, Fortnite, Twitch. It's the #1 iGaming eCash network. That's good. Spotify, DraftKings. I'm super bullish on this one, and I bought. Let's go back. Because I bought an option on it that I think is a good option. And honestly, anything that you can get in, let's see, July maybe. July's a little risky. I feel like they're down today. But, I mean, you can get it at a good price. And October as well. That I bought this one. I mean, I feel like it's a great call. I don't know why it's down so much, though. It's not down today, but it's been down. I just think that this stock right now, it doesn't have enough hype. People, I think, will understand the hype of it in a few weeks. I think, when's the merger? The merger, I think, is around April for this one. So we all know that whenever the merger occurs, that it's going to go up in price. It's going to boom. And then it might go down a little bit after. But I feel like by October, if it has DraftKings and these other betting sites, that the price of it is going to shoot up. There's going to be a lot of revenue that's coming in. Said, I don't get it. Is it like Steam? Is it a way to do gambling and gaming? No. So what it is, it's pretty much just like an online wallet. So just like when you go to an ATM and you pay an interest fee, you pay an interest fee, or like the company pays a fee to use this company. So this company has a bunch of money, just like you have a bunch of money in an ATM, and whenever you take out money, it charges you like $2 or $3. So same thing with this company. So they literally don't have any costs. All they do is they reach out and they network, and that's why they have to, spend money, because they have to keep their positions in other companies, and they kind of just work like an online ATM. So you use Fortnite, you go buy like a skin or something, and it uses this, which is PaySafe, to make sure that the transaction goes through correctly, and then they get a little commission. So imagine how many, let's just go back and look at everything that they are involved in that we can see here. DraftKings. So every time there's a transaction on DraftKings, they're going to get a little bit of the cut of that. So maybe it's even 30 cents, but people are making bets all the time. And that means 30 cents times however many times, that's a lot. And I mean, look, 1.5 billion in organic revenue. We can look at some other companies out there that are worth like over 100, maybe 200, and they don't even have revenue like that. So that, exactly. Appreciate the explanation, of course. So this one, I feel like is a good idea to get into, because it's going to take a little bit of time to grow, and it's not as hype because people don't really understand the concept. What's up, Christian? I see you down there. But you have to think about the age we're in and the kids. Gaming, that it's not going to go anywhere. I don't even want to talk about it going anywhere, especially with coronavirus. I don't know what's happened with gaming percentage-wise, but people have been stuck at home, so obviously they're going to game more. They're looking more into online things, and if you have something that can generate revenue so easily, then it's definitely going to make a lot of money. Let's look at Square, because Square is super similar to this. And let's look at where Square stock is and where this can be. Look, Square stock is at $227.75. They literally do the same exact thing. Or PayPal. PayPal is another example where you just use the service, and every time you use the service, you just pay a little commission out of it. And that's how they make their money. And PayPal has been something on people's radars forever. This one's at $240. Same exact thing. This one right here, it's just up and coming. People don't know about it. And these are the kind of stocks that we have to get into, because it's going to boom. You're going to invest like $15 a share, and you're going to hold it for 3 years, and then down the line, what's that? Let me do the math. If it's at, let's say it's at 220, and you got it at 15, that means you're going to almost 15x it. So whatever you invested, multiply that by 15. And their market cap, let's see. What's their revenue? Let's see what Square's revenue is. $4.7 billion. So PaySafe's already at, wait. Let's do 2020. Or 2020, yeah. They have a gross profit of $597 million. I want to give me the number. Quarter ending $3 billion. That's how much revenue they have. So PaySafe is already halfway there, and their stock right now is at, what's it at? $15.55. If that is not a no-brainer to buy, I don't know what it is. If you have $10, $20, whatever it is, put it in there. But for everyone coming in, I was talking about how we see the market down today, which is fine. This is normal. I think it has to also do with the Biden proposal, as we can see right here. And people are just, they're worried about different stocks and what's going to get money, what's not going to get money. And whenever there's things called bears, which are people who like to put out bad news because they want the stock price to go down because they either A, they day trade it, or B, they want to buy it at a lower price. So they see this and they put out the bad news. The stock prices go down, and you have to take this as a buying opportunity. You have to know the company. Something like NEO, why is it going down 7%? They just announced all this great news. It's probably the next Tesla. There's about a 90% chance at that. And we know what they're doing. They put out their numbers. They're increasing. So, I mean, this is your time to buy. If you didn't get in the 45s, 40s, maybe it'll drop down to like 50 again. That's a possibility, but I really can't see that happening into Monday. There's going to be other news that comes out, and people are confident in NEO. I think this is just a little bit of a shortage right now where people are selling off because of, the news about the stimulus and the whole Donald Trump situation and Congress and the Senate. So, I mean, you can wait for it to ride down a little bit, but we had that $45 range, which I thought was a good price to pay for NEO about a month ago, but I see it at 55, and I think that's its low point now. So, I mean, if you can get it below 55 or at 55, I think that's a great price. Same thing with Lee. I think Lee's going to be great. It's got to be a few $100 stock in the future. It's going to be a good company. I had to put some in there. I made the video on APXT. If you haven't seen that, you need to go watch it. I'm going to be pissed. What's another one? Open Door? That one's good. Let's talk about the banks, actually. So, whenever I'm looking into the market, something that I gauge, not only the indexes, but it's also looking into the banks. And let's go down to the banks, if I have it here. So much pulled up because I was looking at everything. Where are you, banks? Here it is. Okay. So, this is Citibank, right? Make sure. No, Citizens Bank. So, Citizens Bank is down. Let's go back. What else? Oh, it took me to the top. I'm not going in there again like that. Screw that. Scroll me down. Wells Fargo, Fifth and Third, Bank of America, Citi. I mean, all the banks are down today. The market's down, overall. Because what you do is you look at these banks, and whenever they're down, that means people are taking their money out. So when I see the banks down, I feel fine. If all the banks are up, 10%, and my stocks are all down, that's when I'm like, whoa, what's going on? Is there something that's happening to my stocks? Did something go wrong? Was there some type of extra news? Haha, what up, Eric? Yes, sir. I see you in the chat. But usually when you see the banks down, it's an automatic indication that the entire market's going to be down. And as well as you see the ETFs, I mean, ARK has the best ETFs, and this restaurant one, that thing is just up and down and up and down. So I don't even pay attention to that one, really. I just keep it in there because it's an ARK ETF. But I'm not going to invest in that one. What else do we have? Another thing, that we can look at that I just thought of is, let's look at some of the indexes. So the Dow. What's going on with the Dow? The Dow is down. It's down 177 points. That's a lot. And you could see, how many points was it down here? Will it tell me? No, but, I mean, let's do some math. So it's down 300 points at one point. That's pretty low for this. And this makes you know that the stock market's down as a whole. I mean, you can go to anything. Let's go to the NASDAQ. So what I do whenever the stock market's like this is I find all those companies that I'm super duper bullish on and that I know are going to be good. And I go in there and I put, I don't know, whatever I have. Maybe it's 100, maybe it's 200, maybe I buy a call option. But if you know the company and you know it's going to make money in the future, you have to take these opportunities as a buying opportunity. Don't get scared and sell off. Some people, they buy something, they see it for a week and they're like, oh no, now it's down, so they sell it off. But you don't want to be one of those people. You want to be one of those people who buys in the red. You know, when something that you know is valued great is like 10% down, and you're like, okay, I'm pulling the trigger on that one. And then you go back, you make a plan. So if I buy something in the red, I'm average cost dollaring down, and I want to either hold it for the long term, which would be a good idea if I'm confident in that company, or I could just take it for a short-term gain and ride it for a couple months and sell it off. But I'm more of the long-term kind of thing. I don't like risking it with the short-term, because then you end up selling something off whenever you could have got way more. Or like, imagine if you bought Tesla. It had a 40% dip at one point, and people sold off. And why would you sell off on Tesla? Now, like, if it wouldn't have had the stock split, it would have been like a $4,000 stock. And imagine just putting $10 in it when it was $10. I don't even know the math on that. You'd be like 1,000x or something like that. So you put in $10 to make 1,000. So you just have to have an idea of what's going on. You can read a little bit of the news on things. So like, for example, Nano Dimensions, which is something that I'm pretty bullish on as well. If I can type. This stock right here, Nano Dimensions stock offering. That's what it was. So if we go down here, what did they do? Oh, here we go. So Nano Dimensions was doing great. If we look at the 1 week, let's go to the 1 week. Right here, just went back down again. All these stocks love to be red today. So I got it at 973, not too bad. If we look at the 1 week, it jumped up here, and then they did the stock offering because they're trying to raise money to make more printers. And what happened? Boop. It went right back down. And you know what it's going to do after that? It's going to go right back up, because let's go take a look at this. We could do, now let's do the 1 month. So what happened before, I had bought in around this point at one time, but I didn't get that much, and I ended up selling it off because I didn't know much about the company. But they rose, and just like any smart company would do, then they did an offering at, let's do the 3 month, because this is what happened. They rose, and about right here, they offered their stocks at $6.50 a share. So just like we see, for a couple days, about a 4 or 5 day period, the stocks dropped back down, and you could buy them for a little bit cheaper. And then they went back up, and there was a little bit of a sell-off, but gradually it found its way back up to its highest point. So what do? They do another stock offering so that they can get more shares into the pool. They can raise some money to, boost their company, and then it's dropping back down. So we're kind of seeing the same trend. You see how there was a stock offering right here, and it has that same little dip. It's going to dip again, and it might dip down more. But then I'm confident that it's just going to keep going back up, because this company, it's a good company. I mean, That's all there is to it. Let's look into Nano Dimensions actually. Let's see what's popping with this one. By the way, I'm trying to get to 100 subscribers. So if anyone out there watching wants to, shout me out or subscribe on someone else's YouTube for me, please do that. I'm trying to hit triple digits. So let's see. Nano Dimensions. Let's look at their investor presentation. So this is what I'll tell you. A really good thing to look at whenever you want to look into a company is just looking up their investor presentation. They are going to have everything that you need on that presentation. You can keep yourself up to date on the news, but to IPO, they have to make something like this to give the investor an idea into what the company's about, so we're not here guessing. So I think that's an amazing tip. Everyone's like, where do I get my information? How do I know about this company? And you have the opportunity to go in here and look at the investor presentation. Let me see if I can find it. Oh, here it is. No, wait, is that it? Where is it? Look, I'm over here hyping up the idea and I can't find it. Let me see. Why do they not have one? Investor presentation. Is this all they have? Let's see. Let's see what else we can find on this sucker. Maybe we have to look up investor presentation 2020. Sometimes it takes a little work to find these. Let's see if this guy. Let's click on his and maybe he has a link to it.
What's up, guys? This is
We don't want you talking. This is time for me to talk. Why can I not find this? So, Nano Dimensions is a 3D printing service, which it can print a lot of things. It's not just like something that prints paper, it prints like buildings. They have a mansion that they're able to produce in, I think it was like 48 hours with this technology. So it's crazy. So they could take away the use of builders altogether. And imagine if you had a printer that could print you out anything like a car, a house, an apartment. I mean, that's pretty efficient. I know it sounds a little scary, but it could make a lot of money, and that's what we're trying to do here. So I think that's a good idea to get into it. Let's see. All right. They have a lot of things that they do too. Let's go to another company because this one takes a lot of time to look at, and we can go back to BFT actually. Right here, PaySafe digital wallets. Look at its active users. That's so many. 12 million active users for eCash, 3.8 for digital wallets, $23 billion coming through. This is big too. They have 250,000 merchants, so different companies. They were just listing the biggest ones. And this is their profit. $961 million in profit. Let's go back to Snowflake's profit. What's Snowflake's profit at? Snowflake's profit 2020. Or let's do, this one will be easier to look at because it'll be on here. PayPal's, not revenue, but profit. $5.46 billion US dollars. Oh, revenue. I want to know their profit. PayPal profit 2020. Okay. Net revenue. Well, okay, so let's just look at their revenue because they don't want to tell us their profit. Here, 1.5. Pretty sure that's supposed to be billion. Oh, wait. Okay, yeah. So technically that's 1.5 billion because it's 1,523 million. Why, for whatever reason they did that. And so PayPal did 5.46 billion in just one quarter, but I'm not really intimidated by that because PayPal is huge. They also have a lot more shares in the market. That's something else you want to look at. Is let's look at PayPal on Yahoo Finance. That'll give us an idea of what's going on. So whenever you're looking at this, you want to go down to find how many outstanding shares they have. So you want to go to statistics. This is what I go on to look at a lot of things and to understand a company better. Go. Okay, so their shares outstanding are 1.17 billion. So they have a loaded amount of shares. And then let's go to BFT. So what happens is how they get a market cap is they multiply the outstanding they multiply the outstanding shares by the price of the company, like as per share. So where is it at? Let me find it. Market cap. It's got to be on here somewhere. Oh yeah, market cap. So currently their market cap is 274.41 billion. So that's where they get the 1.17 times the 239.79, or roughly that, because I know it varies a little bit, but it's usually right around that, and that's how they determine that number. So let's go to BFT and take a look at that one. On Yahoo Finance, obviously. So obviously I'm big into this company, as everyone can see too. So yeah, you can be too if you want. You can put you some money in here and make some money. And why not, right? So they only have 146.7 million outstanding shares, and they're at 15.59. So let me just make sure. Let me do some math real quick. If we do 14.67 times 15.59, yeah, so pretty close. This is right now. So if you think about it, their market cap is at 2.77 billion, and right now the valuation of their company is only 2.29 million. So this company is actually undervalued. So right now, if you were to look at their market cap, their valuation would only be 2.29 billion, but it's actually 2.77 billion from what we see. So if a company is undervalued, that's when we want to buy, and it has amazing potential. So this is something that I would definitely jump into. As for PayPal, let's run some numbers on this one. So the outstanding shares, which is what we look at to find our market cap, we do 1.17, this is billion, times that 239.79. So their cap is valued right now at 280 billion from what you see at the share price, but their actual current market cap is 274.41 billion. So what does that tell us? That tells us that this company is overvalued and that people are buying into it too much. So are we going to want to invest in something that's already overvalued, that it's at $240 a share? No, we're going to invest in something with a lot of potential, that's at an amazing price per share, that's undervalued, and that we can make a lot of money on if we make the right moves and buy on the dips like that we have today. Because that's why I got on in this call. You can make a lot of money off calls. They're very risky because it makes it look like, you're losing more money than you actually are. And, wah wah. I was up almost $200 this week, but then we dipped down. Thanks to all the bears out there. But, the trend is pretty good still overall. I'm at 515, still at 18% this month, so I feel great about that. I think that the market's going to run back up, and when it does, I'm going to be feeling great. But let's look at all these charts. I'm pretty sure you all can see the charts. Let me make this a little bit larger. So you see how the trend pretty much of every single company is the same. You see that dip at the start, which is kind of around the time that the day traders are selling off. What they do is they'll buy high the day before, and then the next day they'll sell off. So you can see that a lot of these companies fell victim to the same type of volatility. And we can see little drops, bigger drops, but the trend overall is the same. They all, came down from the pre-market. They started off pretty well. They kind of, started trading sideways. Some took a little bit of a dip down. Some took a little bit of a stance up. But, we see the trend overall that's just the same, which tells you that it's not the company itself, it's the stock market as a whole. And so whenever we're blessed with this opportunity, when everything is doing the same thing, we have to know that this is the time to buy companies that we either have on our radar, that we like, or companies that we're already invested in. This is the time to, put in a little bit more money. So, do your own research on the company, but it's a great thing. What's something else that we could look at? I haven't talked about this one yet, but I want to make a video on that one. I don't want to talk too much about that one in the live stream because I know we have a whole 3 viewers, so. But eventually we'll get more. I think that every Friday I'm going to live stream. I know it takes time, so I'm not really worried about not having that many subscribers or not getting that many views. Just going to keep putting out videos and keep doing what I like, because at the end of the day, whenever I make the videos, helps me learn, helps me make money. So, I mean, why not, right? Takes a little bit of time. I like the process though. It's kind of fun. So, and I also need to stop saying so much. What are we going to look at? Let's look at fuel cell. So, rule of thumb that you should do is, first, if you're not going to look at the presentation, the investor presentation, I would, recommend going to Yahoo Finance, and I try to see if right now their valuation is overvalued or undervalued, because on here you'll see that Yahoo Finance has fuel cell is overvalued, but let's take a closer look and see if they're correct. They honestly might be on this one. So let's see, market cap of 6.17 billion. Wow, look at that jump, by the way. They went from 526 to 6.17. Yeah, they're gaining some traction. This company is going to be huge. And I got in, let's see, look at the price that I bought fuel cell at. You're going to laugh. Bought it at $8.94. I was up over 100% on this at one point, but then the bears came out and they decided that they were going to say that this company isn't going to do well. So obviously I suffered the consequences, but there's no way I'm going to lose money on it at this point. I got it at $8.94. So I'm just going to ride it, because look at that jump already. And Joe Biden said he plans on investing more money. Not investing. He plans on giving subsidies to these types of companies and helping them out, because this is the future. We can't use gasoline, oil, all the kinds of stuff like that forever. And coal, we're going to have to innovate, and these are the companies that are going to do it. So, outstanding shares, well, they have a lot for this kind of company. 322.41 million. So, let's go to our calculator. Let's check it out. So 322.41 times 15.8. Oh wait, dang it. 15.84 times 322.41. So actually, the bears are wrong. Right now, the company, its value of its market cap compared to what its share price is 5.1 billion. So, like I said before, believe me or not, the bears try to come out and they try to talk this down, because if you look at the graph, it's up almost 100% in the past month. And whenever they have the opportunity to say it's overvalued, which we can see it's not from their valuation, just because they have a little bit of loss, that's how companies work. They can't be profitable right when they start. They have to be, not non-profitable, but they sometimes lose money at the start so that they can gain money in the future. Tesla literally just became positive in cash. They, were not in debt, but their cost exceeded their revenue. So it takes time. It takes time to build a company, and look at how good of a company Tesla is. But I'm confident in this one. So, like I said, the bears, it kept going up over the month, and at one point, as you can see, at its peak, it was up 131%. It was at $19, which I feel like is a more accurate. Maybe it's even worth more than that. And then it dropped because there was news. Let me check out the news. Fuel cell news on over evaluation or overpriced stock. Yeah, this is the article that kind of caused it. Is whenever, or not the article, but what happened is that this bear from JP Morgan said it's richly valued. Which, why did he say that? Because it went up? I mean, Plug Power went down too. He was talking about all hydrogen energy kinds. So shares of Fuel Cell Energy saying 7.1% in the pre-market, trading Thursday after JP Morgan analyst Paul Koster turned bearish on the alternative energy company, suggesting that the stock would be worth half of its latest closing price. Why? I don't know. He probably wanted to buy in because he knew it was too late, because people like me got it at $8.94 and lower. Koster cut his rating to underweight from neutral and established a $10 stock price target. Crazy. Which is 47.8% below Wednesday's close of 1914. So he saw this thing skyrocket, and he's like, this thing isn't good. We still don't know why. Koster likes the company, and he says it has a strong backlog and a strengthened balance sheet. Exactly. It's a good company, and we saw the jump in it. We saw the jump in market cap. He says fuel cells optionally likes in the versatility of its molten carbonate technology in industrial application, and he is anticipating a breakout contract in the industrial, chemical, or energy sector. Exactly. So you want to get into this thing while you have a chance. I don't know why he's being bearish. He wants, so richly valued at current levels. So he's trying to say it's not there yet, but it is. But people are going to interpret that as jump out of this company, it's not worth the money. But I think what he's trying to actually say is that there's a little bit more hype behind it than there is reality. But I don't think the hype outweighs the reality of this company. I think that it's fairly priced, and I think that actually what happened is before it was undervalued and it came up to a price that it was supposed to be at, and now it looks overvalued, but it's actually not. So it went on a win streak, highest price since 2018. I mean, he even said that this stock is his top pick in the hydrogen space. So he is investing in it. So this is what I think this guy's doing. He knows his power. He's going to be a bear. He turns bearish. So he sees the price drop because he wants to buy in more. He's like, crap, this thing is rising too fast, so that he can buy in more. And then he's going to come out and be like, oh, okay, actually, I'm going to value this company at $25. But you have to be smarter than the bears out there and understand the model of the company and what they do and the future of it, and then you're going to be able to make money. Listen to yourself. Take the news, but I use the news. Thank you, I guess, for giving me a better price, but you got to do your own research. Don't let just what this guy said in a news headline make you go out there and sell a company that could be at $100 one day. Why would you do that? This thing could be at $50 in July. It's possible. When Joe Biden comes into office, whenever things start going well, we have more EV cars, more hype. $50 is a possibility. And just wait, it could run up even more than that. So don't just read the headlines, because they're very misleading. Try to look into it, because you can see this guy still likes the company. It's his favorite, what does it say? His top pick in the hydrogen space. If he had to pick one, he's picking this one. So, think about it. I don't know. It's just really funny to me. What up, Jacob? Welcome to the channel. All right, so let's look at something else here. I'm having fun doing this. Anyone in the chat, what are you looking at? Are you looking at any stocks? I'll give you guys a little bit of time to respond, because I think there's a delay between what I see and what you see. I'll just go back to the screen and talk. Let me transition back to my face. So, yeah, I saw, Jacob, that's what I saw. I said wait for those red days because they're going to come. There's always red days and there's always those green days. Like right now, you're probably like, oh my God, why did I buy in? Let me sell out. I don't want to lose my money. But you have to stay confident because everything is down. We looked at it earlier about how, let's see. Let's go back to it. Just for Jacob here. How we had all the banks, which are down. All of them. All these companies are down too. They're doing the same thing. They're trending down the same way. I know I already talked about this, but something good to talk about. These are all banks. Citi, Wells Fargo, Fifth and Third, Bank of America. And you see the same trends out of these that you do all the other companies. Literally, I could go through all my companies, and whether they're up a little bit or down, they're making the same trend. So the market's just moving a certain way today. And, you know, that's what happens sometimes on Fridays. People are super hot and super excited to get into their stocks on Monday. And you see some of these companies shoot through the roof. And then by the end of the week, you have day traders getting tired, people not looking into their stocks as much. And these companies can just move down, especially when there's other news on the horizon with politics such as Joe Biden and going into office, the transition of power with Trump, with the impeachment. So a lot of people's eyes aren't on the stocks, and as a result, they start selling off because they're not paying attention. They stop caring at the end of the week. I mean, with everything going on too with coronavirus, you don't know if people are pulling out money so that they can use it because of the uncertainty of the stimulus check, which I feel like is going to go through. And I lost my train of thought because I was reading Eric's comment. Someone remind me what I was talking about. If I remember, I'll go back. But, oh yeah, with the stimulus. The stimulus is going to come through, and if you guys watch my video, you can learn how to double that sucker. And I feel like it's fully possible if you invest in the safe bets. You can go a little bit risky and buy into other things. But one that I'm looking at that I really, really have been waiting on for so long, like literally, I was thinking about buying back here, and I was watching it on this day, and then it started to go up, and I was like, meh, so I didn't want to do it. And then it kept going up, and every time that I would look at it, and I'd be like, okay, I'm going to buy it, like at this price, like at $18.75, then it would shoot up. It's like 22. Because I'd put in an order to buy it at a minimum price. So I was thinking I could get it and then it would just go up. I mean, you could see for like the next week, then it goes up. And I'm like, well, can't buy it now. And then it drops. And I mean, I should have bought it there. But wasn't really paying attention to it as much anymore because the week had gone by and it was just green, 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 green. So I was paying attention to other stocks, and then it dropped again. And I noticed it, but I was focused on other stocks. And from there, it just kept going up, and same thing. So I'll keep looking, and if it drops more to like 22, 23, then I'll buy it. But it has the potential to just go back up. But that's why you don't get the FOMO. You don't want to buy into something just because you feel hyped about it. You want to know that the company is a good company and that you're getting it at a good price. So let's go back. Let's look at the evaluation of this one, which what we do, no FOMO. FOMO is bad. FOMO is where you get burnt to a crisp. So let's look. Open door. Open door stock. That'd have been a better thing to type in. Oh, wow. Wait, what? That's different. I always wonder why it's called Open Door Technologies too. I'm tired, but let's see. Everyone go share this with people you know so that they can come subscribe and that I can get to 100 subscribers. Please. And so I can stop messing with everyone to subscribe. So, let me look here on my phone. Gotta respond to someone. Alright. So, market cap at 14.17 billion. Okay? Pretty good. Not gonna lie. At first, too, when I was looking at these numbers, I did not know what they meant. But the more and more that I look into them and just kind of look at people's spreadsheets and the charts of everything, I'm starting to understand it way better. And it helps me to make a better, investment on what I want to buy. I don't want to just buy anything. I can buy anything, but like Jacob said, no FOMO. Not a good thing. So, they have the 544.42 million shares, which we know is how we calculate our market cap, because what we're going to do is we're going to take those shares and we're going to multiply it by our share price. And yeah, see, this is something that I feel like is overvalued. Maybe. Well, what's the market cap? What did we say it was? So many numbers. So many numbers. If anyone knows what it is and they remember it, tell me. Let's go back to this, because I already have this number. Oh, so they're actually right on target with what they should be. They're actually a little bit lower, because they're at about 14.13 if you do the 2590. So, I mean, maybe this is a good buy. So, you could get into this one, and I feel like it would be a good idea. But it just depends. Like I said, you can wait for it to dip a little bit more, which then I think it's undervalued, which is good. You want to buy something that's undervalued, buy something on the dip, so that in time, whenever it increases value and increases revenue, it increases as a company, then you're going to be making a lot more money. And you want to maximize your profits. Don't just buy something because you want to buy it and you're scared that you're going to miss out, because guys, that's called FOMO, and it's going to lose you money if you do it. And we don't want to lose money. We're here to make money. We're here to invest for the long term, no matter how much you have. So, I mean, use your brain on that. Let's see if we have an open door investor presentation. Investor presentation, that would be cool. I really like looking at those. They make me enjoy stocks because, oh, that's awkward. It makes me learn so much about the company. They better have one. And also I really like whenever a company has a really well put together investor presentation. Oh yeah, see, this is what you like to see. You see how nice and beautiful this is? It's beautiful. So, let me get more comfortable. Open door. So, you have the CEO. He's involved in Trulia. That's a good company, actually. Involved in Uber, Foursquare. This lady over here is involved in she was. Correct me. She was involved, and these are the things that she did. Head of engineering at Lyft, head of data science at Google. Wow, that's really good. So she knows how to drive in those customers. Head of pricing engineering. So that's good. VP operations at Amazon, Airbnb. I mean, look at all these companies. These are amazing companies that everyone is involved in, and they're doing great things. So that's like a great start. Wow, that's impressive. I haven't looked as much into that because that's why I haven't bought, because I need to do more research on them. But wow, that's really good. That's encouraging. So it looks like they have an app. Kind of works like Trulia and the other ones, but this one's well put together. We'll go over Zillow too to kind of compare it afterwards. It's next chapter. I don't know why I said that, but I guess this is their chapter. I mean, if you want to go read that, you can. Let's see. How can I post this link in the chat? It's going to show up, but whatever. There you go. Go check it out for yourself if you want to. Let's see. Give me 1 second. So, look at their revenue. So in 2017, they were only at 700 million, which is still a lot. They went up to 1.8 billion. So that's over 100% year-over-year growth right there. That's really good. That's really, really good. And look at their homes sold. I mean, competitor 2, competitor 3, whoever they are. I don't know why they don't list them, but that's really good. $10 billion on the homes that they sold, and in 2019 they had 4.7 billion in revenue. That's really good. Really, really good. I cannot that's really good. That's very impressive. So I'm trying to look to see if this will go better. Alright, Jacob, I'll see you later, dude. Thanks for tuning in. Pretty sure what they do is they go like door to door and sell. Oh my. The largest undisrupted market in the US. That's what you like to hear. It has a massive market. 68% of Americans are homeowners. 5 million homes sold annually. So they're talking about the US market. It has fragmented incumbents. So an incumbent is someone who's in that position currently. So 2 million realtors. 28% of realtors have another occupation. So look at this. Real estate is huge. $1.6 trillion a year for real estate in America. Today, 89% of buyers and sellers use an agent. That's good. So I guess they're trying to change that up. Find an agent. They're talking about the process here. So overall, after all of this, you're paying an extra $30,000. So I think what they're trying to pitch to you is that if you use their company, that you're going to save that $30,000. So you can do the offers on this company right here. It's pretty good. So you can self-tour the homes. You can finance in the app, digital offering process. So you can pretty much do everything yourself. This is, realting made easy. That's pretty good. And this is definitely something I'd keep on the radar. Because like I said in my other videos, we have to invest on potential. It's important to invest in good companies, obviously, but all the companies that you invest in, if you have a good idea, are going to be good companies because you're going to be able to weed out what's bad. And with this company, from what we're seeing in the investor presentation, it gives us a lot of information. So if you really want to go check out a company and see what's going on with it, first of all, you can go on Yahoo Finance and look at all their numbers. Try to understand their numbers. Then you go to their investor presentation and you learn more about the company, how they're presenting themselves, who's running the company, and you can get a lot of information off of this. And that's why I'm able to make predictions. I mean, even in the moment seeing this at their valuation where they seem, pretty good with their valuation. Also with their presentation where you see their CEO, their CFO, all the people involved, they seem like they're going to be, great assets to the company. And then as for their way that they put together how the company works and how you can save about $30,000 on average, which I see on a home, that's a lot of money in some cases. Imagine if you're only paying like $120,000 for a home. That's an extra $30,000 that you could use for the home, and you could upgrade your house. Maybe you get a $150,000 house, and you can do it all online, hassle-free, without the headache, without the realtor. No offense to realtors, but I mean, it's better to do things on your own sometimes. I know I like doing it that way. So, yeah. So, traditional sale, it's complex, averages of 6 counterparties to manage, uncertain, 20% of transactions fall through because of inflexible timelines, 87 days to close, 12 visitors per listing with months in the house. So with this, wow, this is actually pretty innovative. It's simple. You can see the price, the fees, the closing cost. You can see everything. Days on the market. So you're seeing everything you'd want to. You don't have to reach out to a realtor, go out to the home, back and forth. It looks like you could just go right on the app and do it. And it has the numbers to back it up. So I'm not just saying this because I feel like it's an idea. It has the millions and billions of dollars coming through that we can see. So, simple integrated digital experience, just like an app. That's what we want. It has guaranteed close on your timelines, no unforeseen costs. It's fast, flexible closing as fast as 3 days. Compare that to 87 days. 20% of transactions fall to, and then they guarantee they close on your timeline. Pretty amazing. Completely contactless sale. That's awesome. It kind of reminds me of like a home selling service, but like Airbnb. So you have the same transaction process and you see the home and you do what you want with the home, but you don't even have to meet the seller. I mean, I'm not saying that's a good or bad thing. I'm just saying that's what it is. So I think that after I'm done with talking about this presentation and going over the stock market like just one more time, that I'm going to get off the live and go chill. So browsing for a quote 80% of the time. 20% are real sellers. So this, even for the seller, this is good because they don't have to waste their time talking to people who are just, looking around. They can just put it on there and those people can look and weed out whether or not they like the house at the start. They don't have to drive there. They're frustrated. And it just saves like a lot of the hassle. A lot of the homeowners, it looks like, sell directly without any agents. 2019 real seller conversion is 34%. That's good. It's really good. These are all good. Net promoter score, 70, better than all these. So this is good. I mean, you could keep reading through, but I linked it in here, and you can learn more about it. But from what I've seen already, this is a great company, and I think that it is going to grow a lot. So keep your eye on that. All right. And so, actually, one more thing. Let's compare Zillow to it and its stock price, because why not? So Zillow is at $143. Opendoor is at $26. And their revenue was $2.7 billion in 2019. And I want to see their 2020. Do they have their 2020? Zillow Revenue 2020. Or maybe Maybe it's on Yahoo Finance. Zillow. So you see its market cap. So revenue of 3.49 billion. And what's Open Door at? Sorry about that. I had to fix my iPad. $3.59 billion. So guys, look, they have more revenue than Zillow. But Zillow's at this price. Like, what? See, these are just things that people need to know about. Because there's no way that this company should only be this amount. I mean, it's valued correctly right now at its market cap. But it definitely, I can see it going up in the future. I feel like it's going to be huge. So yeah. Well, like I said too before, we're going to be ending this soon. So sorry for anyone or for a person that just joined. But overall today, we can see that the stock market is down. A lot of these companies have the same trend. Started off, you know, not up, but they were up compared to the market at the end of the day. They dropped down because of some short selling and people trying to sell off before the weekend, take some profits, maybe go out, spend it on a little dinner, or do whatever they want to it, invest in something on Monday. And you know, we kind of went sideways. The market's kind of quiet then. People were just buying and selling a little bit. And then some companies saw a little bit of a dip, and then others saw a little bit of a peak. But overall today, I think there's still a little bit more time to buy till like 6:30. I would go, I'd find your favorite companies and check to see how much they're down and go and buy. This is a buying day. Don't let the red scare you. I'm not concerned at all because I know the companies that I have are going to be fine. It's a long-term hold. I mean, right now we're trading sideways. People aren't really doing much. People are, you know, worried about what they're going to do next week. They're just chilling. Market's quiet. Nothing. I mean, people. I think that as well with the presidential race and the Senate and everything that's going on, people are focused on that. They're waiting away from stocks a little bit, but whenever tax return time comes, whenever Biden's in office and he starts giving out these checks, whenever we see, you know, coronavirus start to slow down and more people start getting the vaccines, then we're going to see the market jump back up and all these good companies are going to jump up too. So buy while you have a chance. Back in March, whenever coronavirus started, we saw that huge dip too. Imagine if you would have bought some of these companies that you have now back then. You'd be making money already. You'd be, you know, positive. Imagine if you had $100,000 and you invested it. You'd be a millionaire right now if you invested in some of those companies. So just keep that in mind. Know what the red means. Don't be scared. Know it's a buying opportunity. And we'll see all of these that I have at least go green soon. And yeah, I mean, you guys just stay positive. For everyone that's going to watch after, thank you for watching. Hit the subscribe button. You know, you can like the live stream if you want. And yeah, thanks for tuning in.